Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange 2024 in Miami. Joining me for this segment, we have Bill Coleman, head of ETF Capital Markets at Vanguard. We're going to discuss the 60/40 portfolio and product development trends within the ETF space. Bill, it's great to have you with us. Welcome to TradeTalks.
Thanks for having me, Jill.
You got it. Let's talk about the role of 60/40 in the current environment.
Absolutely. So there's been a lot of talk about the 60/40 portfolio over the past year. And granted, it had a rough year in 2022. But if you take out the timeline a little bit and look over the past 10 years, the 60/40 portfolio has returned on average 8% a year. And that's with the bad year in there. Let's say you were scared away before the beginning of 2023. 2023, the 60/40 returned 18%. So I think it still has a really valid place in everyone's portfolio. But what's important here is not to get so much caught up on the 60/40, the ratio. Could be 70/30, could be 50/50. What's important here is that it's a well-diversified portfolio and that you look at where bonds are right now, we finally have the best yields we've seen in 15 years. It's even more important role in a well-diversified portfolio is having stocks and bonds.
Of course, if you're a long-term investor,
Yeah.
You're not thinking about that in the short term anyway. What about Vanguard product development trends? What do you have going on there?
2023, we think it's like the year of active. You look at active flows in active ETF flows, for example. Active ETFs in 2023 pulled in 21% of all cash flows. And this is remarkable considering that they only have about 6% of assets. So they're really punching above their weight. So we think that active had a great year. You look at product launches, 75% of the products launched, ETFs launched in 2023, were active strategies. So we're capitalizing on that as well. Back in December, we launched 2 new active ETFs, VCRB and VPLS, our core bond fund, and our core plus bond fund, that give you investors a broad exposure to the fixed income market. They are active strategies at a great price point of 10 basis points for VCRB, 20 basis points for VPLS. And compare that to what the average expense ratio is for an active ETF. It's 50 basis points. So we think we're priced very competitively.
Why do you think active ETFs are growing with momentum? Is it because the composure of the market has changed? We're not like, from the bottom of the chart to the top right, everything's moving to, the same way. Is it because there's, the composure is different now?
Yeah, I think it took a little bit for people to get comfortable with the ETF wrapper, especially for an active fund. For a long time, ETFs were synonymous with index investing, and over the past couple of years, you're seeing more active managers getting comfortable with putting their active strategies in an ETF wrapper. So I think you're just going to see that continue to happen. Investors are voting with their feet here. Cash flows are moving pretty profoundly from the mutual fund wrapper to the ETF wrapper, and I think that's only going to continue to go.
All right, Bill, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.